Is the stock market about to crash? The question of whether the stock market is about to crash is on the minds of many investors, especially during periods of uncertainty. While it's impossible to predict with 100% accuracy, there are several signs and factors that analysts often examine to determine the health of the market. Economic indicators. One of the most important indicators is the overall economy. Rising inflation, increasing interest rates, and slow economic growth can create fear among investors. When central banks, like the US Federal Reserve, raise interest rates to fight inflation, borrowing becomes more expensive, often leading to lower corporate profits and reduced consumer spending. These factors can contribute to a market downturn. Corporate earnings. Another key area to watch is corporate earnings. If major companies report lower than expected profits, it may signal economic trouble ahead. When investors lose confidence in the future profitability of companies, they may start selling their shares, which can trigger a market drop. Geopolitical tensions. Global political instability also affects investor sentiment. Wars, trade disputes, and diplomatic tensions between major countries can lead to fear and uncertainty in the market. These events often cause investors to move their money into safer assets, such as gold or government bonds, resulting in a decline in stock prices. Market sentiment and speculation. Sometimes, market crashes are caused not by real problems but by panic and overreaction. If too many people believe a crash is coming, they might start selling their stocks out of fear, which in turn causes prices to fall. This is known as a self-fulfilling prophecy. Social media, news coverage, and market rumors can all influence this kind of behavior. Are we headed toward a crash? At present, there are mixed signals. Some sectors are showing strong performance, while others are struggling. While the market may face short-term corrections, it does not necessarily mean a full-blown crash is coming. Long-term investors should focus on fundamentals rather than short-term noise. What should you do? If you're worried about a crash, the best approach is to stay informed and diversify your portfolio. Investing in a mix of stocks, bonds, and other assets can help reduce your risk. Avoid panic selling and try to focus on long-term goals.